So the Kenyan shilling firmed slightly to 84.3050 per dollar, compared with Thursday's close of 84.4555. And this was aided by commercial banks trimming their dollar positions. And looking at the NSE 20 share index, it closed at 4,965.98 points, and that was a 0.2% rise, while the all-share index on a week-to-week basis rose 0.11% to settle at 126.89 points. With us in studio is Eric Musau, a research analyst with Standard Investment Bank. Many thanks for joining us.
Thank you.
On Friday, we saw Colonel Kobil making an announcement that they have returned back to profitability. And of course, it's one of the stocks that has been having a lot of speculation. If you look at its year performance last year, it reported a 9 billion pre-tax loss. And now they're saying that their restructuring is likely to pay off and they're likely to return to profitability. What is the signal that the market is reading from this information?
Well, I think that's positive. I mean, returning to profitability is a good sign. They did mention that they're back on the gross profit, they're actually back to profitability, and then EBITDA. But they're saying the restructuring will probably take for the rest of the year. That's what really they're targeting. And then in between, they actually did mention, the asset disposal that they're looking at, which essentially is supposed to reduce their debt position. Because one of the key challenge for Colonel Kobil really is reducing its finance cost. It's a good thing that interest rates are coming down, so that to a certain extent, but also they're trying to optimize their working capital in order to reduce their finance cost.
Are they also telling investors out there that we are now ready for a takeover? If you recall, Puma deal collapsed earlier this year, and now that they're back to profitability, is it another signal that the market is going to take a cue from?
I think they want to work on the basis that they're an ongoing concern. I don't think they want to be perceived as sort of ready for a takeover. I think they're really working on either options, because if they're really working on an asset disposal, their balance sheet is pretty solid and they can actually pay down their debt. But obviously, if they're looking to expand across Africa, which is what they've always said, getting some sort of finance from somewhere, either from a financial institution or a larger oil multinational, would be something that they'll probably discuss, and I think it's something that is on the table.
How do you see the stock performing? On Friday, we saw the stock rally 3% to about 10 shillings and 35 cents, although the information came after the market closed, and now, of course, it's likely to feed into today's stock price. How do you see that counter performing today?
It's been very volatile. I mean, it's traded a high of almost 17 shillings. Now it's trading around 10 shillings. So we expect a lot of volatility. Obviously, there's a bit of positive sentiment just ahead of the annual general meeting on Thursday. So we might see a bit of interest, I think, at this time, but obviously volatility will continue. Depends on what news comes out of the AGM and what sense investors get with regards to the outlook.
Okay, crossing over to the banking stocks, we have Barclays Bank of Kenya results coming in on Thursday, and on Friday it was one of the stocks that was on the gaining side, gaining about 1% point, reaching an all-time high of 18.25 shillings. How do you see the stock performing today, and considering that it is one of the conservative banks according to perception in the market? How do you also, what are the numbers we can expect on the Q1?
We think at the current price it's a bit almost fully valued. They restructured last year, and so essentially the ABSA model would really be more visible with Barclays. Obviously, the name will not change, but from an operational point of view, they will now be reporting into South Africa, and the strategy would mirror more of ABSA and a lot more expansion we expect to see from them. But at this time, we think the valuation is fully valued. But we wait to see what strategy actually start to unveil, in order to sort of decide the reform.
Taking a cue from the other banks that have already issued their earnings, we saw that when you look at the first performance was also mirrored the sluggish economic growth that we had in the first quarter. Do you see Barclays backing this trend, or are they likely to, be in the same heap with the rest of the banks?
We don't. I mean, apart from CFC Stanbic, which reported pretty solid numbers, the rest we think will probably be on the same band. I don't think there'll they'll be doing too well. And obviously CFC Stanbic last year was a bit, so this year we expect the banks to be a bit sluggish, at least first quarter numbers. Then depending on how interest rates go, the rest of the year could start to improve.
All right. This morning we woke up to news that the power distributor Kenya Power has frozen the new connections of electricity, and this is on the back of the government recently rejecting their bid to raise electricity tariffs. How do you see this affecting their earnings and also their stock?
There is a lot happening to Kenya Power, and I think they're also probably trying to flex their muscles to a certain extent. They had requested for a tariff hike, which was rejected. But also last week, we saw a member of parliament allied to the Jubilee government proposing the breakup of Kenya Power, the distribution monopoly, essentially. We don't know in what form that's going to take. We haven't seen the bill. But obviously for Kenya Power, this is really a fight for survival. And if you look at it from Kenya Power's point of view, they actually do have a point. They subsidize some of these new connections. And obviously, if they can't get a tariff increment, they can't keep on subsidizing or connecting consumers at a much lower cost than what it actually costs them.
But the fact that they're not going to have new business in the form of new connection, will that not affect their bottom line, new profits that they might realize?
Actually, when you look at the numbers, the new connections are not as profitable. They're really more on the rural electrification. So the electricity consumed by those consumers is not really that much. And so when you consider the effort it takes to take the electricity to them and how much consumption they actually make, it doesn't make economic sense. So I would imagine now they're really looking at it from more really an economic perspective.
All right.